Namaste. Good morning. The intention is to complete capital gains today. So, before the power went off in the last class, we had seen the provisions of section 54B, 54EC, and 54EF. We have seen the provisions of section 54B, 54 EC and F. 54B, sell a agricultural land, buy a agricultural land, get the exemption done. 54 EC, sell land and building which is a long-term capital asset. That is important. And purchase specified bonds, the two bonds, and the period is only 6 months. The period is only 6 months, not more than that, for the investing period. 54F, sell any asset other than house property, because if you sell a house property, buy a house property, you can claim 54. Why will you opt for 54F? Because it has one extra condition and it has a formula for computation, whereas 54 is a simpler manner. So sell any asset, buy house property. It can be jewelry, it can be vacant land, it can be shares. Okay, but what you should invest is in agricultural land. If you do that, you will get that exemption. And quantum of there is one extra condition of assessee should not own more than one house property on the date of making this investment. Okay, so 0 to 1 claim, 1 to 2 claim. Already you have two house properties, no more 54F for you. And then the mode of computation of exemption is net gross LTCG into amount invested divided by net consideration. If the whole net consideration is invested, it is different. Otherwise, this is the mode of computation. We are going into the questions. We are going into the questions. Question number 33. Dikshit plans to reinvest in properties, planning to sell away his existing properties and purchase new ones as given below. Advise him of the tax consequences. He purchased a flat in 1415 for 6,20,000. The present market value of the flat is 646 lakhs and the stamp value 50 lakh, and he might be expected to pay a brokerage of 2% on sale. He inherited Manjula Desha. So now we are clear that these words trigger the discussion of Manjula Desha. In May 2012, his family agricultural land from his father. His father had purchased it in 3-4, fair market value on the date of gift, which is completely ignored, and the estimated sale value now. His investment in unlisted shares, rupees 40,000. He is holding 10% equity in the company and sells these shares for 75 lakhs. The net worth of the company as per approved valuation method is 75 lakhs. So, section 50CA comes into place where it says that in the case of unlisted shares, etc., okay, the fair market, the full value of consideration will be actual consideration or fair market value, whichever is higher. He is planning to purchase a bigger flat, which cost him 25 lakhs, proposing to buy a agricultural land in Madurai for 5 lakh and REC bonds for 3 lakhs. Estimate his capital gains. Read through. It's not advisable to do columnar. One has a Manjula Jesha implication, one has exemption. So let's do it independently. Let's do it independently. First, let's do house property. Full value of consideration. Full value of consideration. How to compute? Huh? So yeah, good. Okay. By applying the provisions of section 50C, actual consideration 46 lakhs. Okay. Stamp value 50 lakhs. 110% of actual consideration. The value, the stamp value does not exceed 110% of actual consideration. Hence, okay, actual sale consideration will be taken as full value of consideration. Hence, actual sale consideration will be taken as full value of consideration. Cost of transfer 2% of sale value. Cost of transfer 2% of sale value. Now I want you to understand
Sir,
something. Yeah.
I have a doubt, sir. If we take the stamp value as
Yeah,
full value
that's what
consideration.
I'm also telling Pineapple. That's what I was
Okay, sir.
starting in the class.
Mm.
Please understand. In this case, fortunately, you had 46 lakhs. Suppose this is 51 lakhs. I would have taken 51 lakhs, but whereas for computing brokerage, I should take on the original consideration. I will not pay brokerage on deemed consideration. Deemed consideration is only for income tax. I will not say the broker that stamp value is so much. I will only tell you whatever you price you get me, in that 2% commission will be paid. So even if stamp value is taken, brokerage will be computed on the sale consideration only. Like 20,000 into 317 divided by 2014-15 to 40. Gross LTCG deduction or sorry, exemption under section 54. Exemption under section 54. Amount invested in the new property. He is buying a bigger flat for 25 lakhs. Gross LTCG whichever is less. Join us from gross LTCG. Arganaki. Join us from gross LTCG. We are the 33rd question. Exemption under section 54 EC. I want the clause to be clear. You can claim it here or you can never claim. You can claim it for agricultural land. You cannot claim it for shares. Asset transferred should be land and building for the purpose of claiming 54 EC. Okay, so you can claim it here, house property or agricultural land. Otherwise, you cannot claim it against shares and all. Okay, just writing the rules once. Amount invested is 3 lakhs. Just writing the rules once so that just recollecting. Gross LTCG after claiming 54 maximum limit 50 lakhs. Yeah, you can claim. Wherever you claim, this is the same benefit. We have time, so we can it here itself. That's why. Am I clear to you? Am I clear to you? Okay. Agricultural land, particulars, as per law, as per Manjula J. Shah. Full value of consideration as per law. I mean, both cases, because he might give he inherited agricultural land is for the farmer 12 lakh 10,000, which becomes the net conservation also. ICOA. He inherited the land in May 2012. May 2012, and his father had purchased. Okay, his father had originally purchased for 66,000. So 66,000 into 317 divided by May 2012. So 1213 of 200 of 200. Okay, 200. Okay, year of inheritance. Year of inheritance. Whereas if I go as per Manjula J. Shah case into 317 divided by father had purchased it in 2003-4. Hmm? 6 lakh 60 is on the date of gift, which should be ignored. Fair market value on the date of gift should be ignored. So 34 2003-4, which is 109, which is 109 year of original acquisition. Exemption under section 54B. Exemption under section 54B. Okay, he's planning. He is proposing to buy an agricultural land from his uncle for rupees 5 lakhs. Okay, gross LTCG or amount invested, that is 5 lakhs. Okay, whichever is less in both the cases, 5 lakhs. Taxable LTCG. Next, I am working out for unlisted shares. Okay, unlisted shares. Full value of consideration by applying the provisions of 50 CA. Actual consideration 4 lakhs. Okay, FMV fair market value on the date of transfer computed on proportionate basis. So 7 lakh 50,000 into 10%. 7 lakh 50,000 into 10%. 75 lakh, sorry. 75 lakhs into 10%. So actual consideration or FMV, whichever is higher, whichever is higher. So I will take 7 lakh 50,000. I will take 7 lakh 50,000, even though if it is sold for 4 lakhs, but as per 50 CA, if the fair market value is higher, then it should be taken. Okay. He has acquired it on 16th November 2015 for 40,000. 40,000 into 317 divided by November 2015 is 1516 254. doubts? May I? May I? Okay. Sagar is becoming a partner in East West Airlines. He is planning to introduce some of his assets into business as his capital contribution. He transfers his house property to the business fair market value, but the value recorded in books. Whenever a partner joins a firm, value recorded in the books. Okay, value recorded in the books will only be taken as full value of consideration, not the fair market value. Okay, asset converted into stock in trade, fair market value. Asset introduced into the business, value recorded in the books. During the year, the partners decided to increase the capital base of the firm and introducing capital. Sagar converted all his investments, listed shares and bonds to the investment of the firm as his capital contribution. The firm are readily accepted and credited. Analysis revealed that Sagar has purchased a house, shares and bonds. Sagar investment in purchase of land for construction of another property. The cost of land is 18 lakhs. Can I claim 54? Can I claim 54 for purchase of land for construction of property? Yes. Why?
Yes, sir.
Why, Hari?
Sir, and for construction, we can purchase.
For construction, we can purchase.
He's going to construct now, sir.
Going to, I accept with you. Okay. Yeah, I got the answers. You're right. I accept. But what answer I was looking for is land and building. Opportunity there too is one day house property. So land can be purchased. Yeah, for construction, land and building. House property chapter will use the word terminology land and building opportunity. So yes, he invests in rural electrification program of 1 lakh on December 22. Yeah, it is beyond the period of 6 months. It is beyond the period of 6 months. In examination, we should note these dates. Whenever date is given, there is a significance. Okay, go ahead, answer it. Why am I, in this case, indexing listed shares? It is listed shares. Of course, 31,118 value is not given. Why? Because you are not transferring it to partner, you are not selling it to the partnership firm through a recognized stock exchange. You are just transferring your asset, giving it to the partnership deed. Okay, it is not sold through recognized stock exchange, so STT would not have been paid. What is section 112A? Listed shares on which security transaction tax is paid. Only if you pay security transaction tax, you will get the first 1 lakh as exemption, balance at 10%. Because you are paying STT. If you don't pay STT, it's like any other shares, and you can in this case index it. This is the answers I'm getting. It will be taxable. You can 112A can be claimed. Will be the cost 3 lakh 60. It is not previous owner. Now they have purchased it. The firm purchases it. Long-term capital gain 75 lakh arising from transfer of building will be fully exempt from tax if such capital gain is invested in the bonds redeemable after 5 years issued by NHAI. Examine with reason whether the given comment is true or false. Exam question. Okay. Yeah. 50 lakhs. You cannot. Okay. The maximum the deduction, exemption you can claim is 50 lakhs. Good, Ali. If I acquire shares to, yeah, 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 you're right. But அங்கதான் tax இல்லையா? Why do you worry? When I acquire shares for the donor, there is no tax. No. Ah, yeah. Manjula Jesha will be. Question number 36. A resident women individual sold vacant land for a net consideration of 3 crores on 10th January 22. On the said transaction, she earned a LTCG of 1 crore 65 lakh, which she invested 50 lakhs in capital gains bonds in 54 EC within 6 months. Further invested 25 lakhs for purchase of house property. Her other income is 50 lakhs, 46,000. Compute the tax payable by the assessor. What are all the two exemptions? 54 EC and what is sold? Land. So 54F. The two exemptions are 54 EC and 54F. Asset sold is a vacant land, not house property. Asset sold is a vacant land, okay, not house property. So you will only get 54F. Sorry, and it starts with net consideration. The question has given, actually LTCG itself, the question has given. Gross LTCG is 1 crore 65 lakhs. The question has given gross LTCG 1 crore 65 lakhs. Exemption under section 54 EC. Okay, okay. So we all know amount invested is 50 lakhs. Gross LTCG is 1 crore 65 lakhs. Maximum limit is 50 lakhs. So we can claim 50 lakhs. Exemption under section 54F. Exemption under section 54F. Entire net consideration is not invested. So proportionate exemption. Formula is gross LTCG into amount invested divided by net consideration. Gross LTCG into amount invested, wait, divided by net consideration. Gross LTCG, okay, gross LTCG after claiming 54 EC. Gross LTCG after claiming 54 EC is 1 crore 15 lakhs. Okay. Amount invested is 50 lakhs. Net consideration. Okay. Please understand now. Please understand now. Okay. By default, the exemption claimed should also be adjusted. When you adjust the numerator, the net consideration, the gross LTCG was 1 crore 65 lakhs, but you are taking 1 crore 15 lakhs. When you are adjusting the numerator, adjust the denominator also to that extent. So it will be 3 crores minus 50 lakhs. Okay, 3 crores minus 50 lakhs. 2 crore 50 lakhs. There are some authors who do the, I mean, the other way. Institute has not yet clarified, which is, அந்த மாதிரி கொஸ்டினே பண்ண மாட்டேன்றாங்க. So you can even do the direct way. 1 crore, I mean, gross amount invested, gross LTCG 1 crore 65 lakh into 50 by 3 crores கூட போடலாம். Small difference தான் வரும். Okay, this is one other school of thought. gross total income or total income is 92 lakh 46,000. 92 lakh 46,000. Computation of tax. Computation of tax. Okay. LTCG taxable at 20%, section 112 comes to 92 lakhs. Slab rate லாம் போட்டிருப்பியே படுவா நினைச்சேன். Okay. Income taxable at normal rates 46,000. Income taxable at normal rates 46,000. Where income taxable at normal rates is lesser than basic exemption limit, where income taxable at normal rate is lesser than basic exemption limit, then the deficit can be adjusted against LTCG and the balance will be taxable at 20%. And the balance LTCG will be taxable at 20%. So, what is the basic exemption limit? 2,50,000. Deficit, okay, 2,50,000, okay, minus 46,000. That is the deficit. 2,50,000 minus 46,000. Okay, so net taxable LTCG after adjusting deficit, will be 92 lakh minus 2 lakh, 89 lakh 96,000. Okay. Base tax at 20%. Base tax at 20%. Base tax at 20%. And surcharge at the rate of 10%. Income exceeds 50 lakhs. Individual income exceeds 50 lakhs at 10%. அவன் முடிவு பண்ணிட்டான், இவர் போட்டு முடிக்கிட்டோம், நான் அப்புறம் பாத்துக்கிறேன்னு. Okay. So 1,79,920. Add HEC at the rate of 4%. Okay. Total tax payable. We should keep on doing assessment of individual assets and then consolidate and do the other things also. Take your time. Okay. Okay. Any doubts? Are you clear? Okay. This is how LTCG, the tax has to be computed. Let's move on to the next set of uh, exemptions. So, exemptions, I am dividing it into two, my dear friends. The first set of exemption is for individuals, though 54 EC is for all assessees. Okay, when you look at 54 EC as a theory, okay, it is for all assessees, not just individuals. Even companies, firms can claim 54 EC. Okay, but of course, the restriction is land and building. Otherwise, 54, 54B and 54F is for individuals, majority of the time domestic assessees. Now I am going to exclusively if you have income under PGBP, okay, business assessees, what are all the exemption? Again, there are three exemptions apart from 54 EC, which they can claim. 54D, G, and GA. G and GA are same, okay, with a minor difference of the purpose. Otherwise, they are the same. So let us look at 54D. Compulsory acquisition of land and building forming part of an industrial undertaking. Let us take that my industry is in Guindy, okay, and the metro project, expansion project, my land and building was acquired by the government. So I purchase another land and building for re-establishing this industrial undertaking. I get the exemption. Okay, right? Before progressing, let me come to the most important point. In the case of all business asset, majority of the gain can be short term. Only for land it will be long term. Only for land it will be long term. For building, plant and machinery, intangibles, furniture, everything are no depreciable asset. Section 50 will be the dominant section. So it will be a short-term capital asset. Majority of the time, it will be a short-term capital asset. Am I clear to you? Are you okay? Yeah. Okay, majority of the time, it will be a short-term capital asset. So short-term capital gain that you should remember, okay, in this business circumstances. Available for all assessees, the first condition, available for all assessees, obviously for those who are having income under PGBP, industrial undertaking. Asset transferred should be land and building forming part of an industrial undertaking, and asset should be compulsorily acquired. What is the principle of compulsory acquisition? When is it taxable?
Compensation is
When
taxed only when
when the
it's received.
compensation is received. However, the numerator will be the year of compulsory acquisition. The year of compulsory acquisition. If it is a depreciable asset, till you get that compensation, till it is determined, keep claiming. Okay. Asset transferred may either be short term or long term, obvious. The said land and building should have been used for industrial purposes in the immediately preceding 2 years. Active industry it should be. Assessee should have purchased another land and building from the date of receipt of compensation, not from the date of transfer. The purpose of new land and building is to re-establish the industrial undertaking. The newly purchased building should not be transferred within 3 years. CGADS is applicable. Quantum of exemption, gross capital gain. It can be both long term or short term, or amount invested, whichever is less. Read through. from the date of purchase or construction. Question number 37. PQR Limited purchased the land for industrial undertaking in May 2005 at the cost of 3,50,000. The above property was compulsorily acquired by the state government at a compensation of 12 lakh in the month of January 22. The compensation was received in February 22, so same year, no problem. The company purchased another land for its industrial undertaking at a cost of 2 lakhs in March 22. Institute question. Compensation received from the government is 12 lakhs. Less ICOA May 2005 at a cost of 3,50,000 into 317 divided by May 2005. So 56,117. Gross LTCG exemption under section 54D. Amount invested 2 lakhs. Gross LTCG whichever is less. Question number 38. Huh? சரி, I understand additional depreciation. ஆனா land and building னு பேசிட்டு இருக்கோம். நீ அந்த ஜன்னலை திறந்து Vyakul Limited, a manufacturing company, but I'm happy that immediately manufacturing, you remember the additional depreciation. A manufacturing company purchased the land for 6 lakhs in 2012 and actually it should be 2012 illa adu. Somebody changed it. It is 2009. It is 2009 actually. Can you please change it? It is 2009. and constructed building in the year 910 for 20 lakhs. Please change it to 2009. The land and building is compulsorily acquired by the government on April 20, 2021, for which a sum of 80 lakhs, 40 lakhs for land, 40 lakhs for building was paid on 18th March 22 in the same year. Okay. Compute the impact of taxation and depreciation taking into account the following. On 1st April 21, the company owns two buildings, one of which is only acquired by the government. The written down value of the block is 2650. Company purchased another land and building for 50 lakhs, 30 lakhs of land and 20 lakhs of building on 16th January 22. If in case A, the company purchases another building alone pertaining to the same block on the same day for 10 lakhs. Case C, company purchases another building in January 21, it should be January 22, 18 lakhs, and deposited 15 lakhs in CGADS in October 22. It should be January 22, please. It should be January 22. Read through. First, I am doing for land because it is a long, indexable asset, non-depreciable asset, and then we will do for building in the regular depreciation format. Okay. Full value of consideration. Full value of consideration. Okay. 40 lakhs, 40 lakhs for land. 80 is for total. Okay. 40. Less ICOA because this becomes the net consideration also. Less ICOA. Please take it as 2009. May 2009. Please convert it into May 2009. 6 lakhs into 317. 317, yeah, April 21 acquired and March 22 you got. Okay. May 2009 is 910. 910 is 148. 148. 2019. Shall we go ahead for building? For land, I am getting 27, 14, 865. Now I am going for building. Computation of depreciation slash capital gains for building. Particulars, case A, case B and case C. Opening WDV is 26,50,000. Additions put to use for less than 180 days. Because I have purchased in Jan 2022, because I have purchased it in Jan 2022, it is put to use for less than 180 days. 20 lakhs in first case, 10 lakhs in second case, 10 lakhs in second case, and in third case, it is 18 lakhs. One minute. Deletions. Compensation received 40 lakhs. Short-term capital gain when the block ceases to exist. Only in case B. Only in case B we will get short-term capital gain of 3,50,000 because that is the circumstances in which block has ceased to exist. That is the circumstances in which block has ceased to exist. In the other two cases, there is still balance for depreciation. Less depreciation at the rate of 5% as building is put to use for less than 180 days. Up to this takedown, we'll do the main exemption and it. May I? May I progress? May I progress? Because now only the main answer comes. Okay. Computation of taxable capital gains. Okay. Let me go to case A. Gross LT LTCG, gross LTCG is 27 lakh 14,865. 27 14 865. Okay. Exemption under section 54D. Exemption under section 54D. Gross LTCG or amount invested. How much is the amount invested in case A? How much is the amount invested in case A? Please read it. 50 lakhs. That is, amount should be invested in land and building. Don't try to correlate. For land, I should invest in land. You should have invested in land and building. That is what the law says. This is one thing which you have to understand. Second thing, all of you have to understand. This section, next section, everywhere you have to understand one more thing. Sir, can I claim exemption as well as depreciation? Because you can see for this 20 lakhs, you have claimed depreciation. Can I claim exemption as well as depreciation? The law has said yes. The intentions are two different things. Exemption is to make you invest. Depreciation is because you use the asset. Exemption is to make you invest. Depreciation is for the asset to be used. So do not try to correlate these things and all. You can claim exemption as well as depreciation. Here it will be 50 lakhs. So whichever is less, in case A, taxable LTCG nil. My first level of understanding is yes, you can claim exemption. You need not correlate and see for land I should invest in land. No, transferred is land and building, invested is in land and building. You can claim, friends. Second understanding is you can claim exemption as well as depreciation. No problem. No problem. You can claim exemption as well as depreciation. Okay, case B. Okay, for a minute, you should listen and then only take up. On land, I got an LTCG of 27,14,865. On building, I got a STCG of 3,50,000. Okay, amount available for exemption. How much is that? In case 2, how much we have invested? 10 lakhs. Amount available for exemption is 10 lakhs because in case 2, I have only purchased building of 10 lakhs. 10 lakhs is only the amount available for investment. I have a LTCG of 27,14,865, STCG of 350. What is the good tax planning?
Sir, STCG first, sir.
First STCG, good. Because LTCG is taxable at 20%. STCG, depending upon the normal rates, if it is a company, it can be 25 or 30%. Okay, as our friend have quickly said, that First, I should provide towards STCG. Okay, a prudent tax planning exercise is to first provide towards STCG as it is taxable at a higher rate and then provide for LTCG. Okay, and then provide for LTCG. So my dear friends, I will compute 350 here and the balance 10 lakhs minus 350. So I will get a taxable LTCG in case B of 20 lakh 64,865. Take your time, neatly write down so that you are clear about why I am giving first for STCG. Am I clear to you? Why I am giving it to building first? Because it will be taxable at whenever there is both LTCG and STCG. Not only in this section, 54G will also have similar question. That's the very popular section for questions. So first we should provide for STCG, then LTCG. The amount balance will be only for LTCG. In the third case, you have both building cost and you have also invested, so it can be claimed completely. So 54D, sale of land and building and forming part of an industrial undertaking, and the sale arises due to compulsory acquisitions. Now I am going into the next section, which is section 54G, shifting of industrial undertaking. Shifting of industrial undertaking. Please understand what this section tells. My dear friends, this section tells us if I shift an industrial undertaking from an urban area to a non-urban area, the facility is provided by the government to promote non-urban areas. They have not said backward areas. They have said non-urban area. If you shift your industrial undertaking from Chennai to somewhere outside, okay, what happens? You have to sell your land, building, plant and machinery majority of the time here and acquire new asset there. The capital gains that is coming to you out of this sale will be exempt when you buy it in that new place. Assessee shifts his undertaking from an urban area to a non-urban area. From an urban area to a non-urban area. Okay, right? For this purpose, transfer assets of the industrial undertaking and purchases new asset in the non-urban area. Asset transferred or land, building, plant and machinery. Please understand, furnitures are not a specified asset. Intangibles are not specified asset. Intangible என்ன இருக்கு transfer பண்றதுக்கு? Okay, so only these three. The transfer is effected in the course or in consequence of shifting of industrial undertaking. Assessee within specified time period purchases new plant and machinery, acquires new land and building with the intention of re-establishing the undertaking. Even expenses incurred in the process of re-establishing is allowed as investment. Specified period means 1 year before or 3 years after the date of transfer. Even if you buy a land there and sell your land and building, majority of the time that will only happen. That can also be claimed. Newly constructed should not be transferred within 3 years. We all know that it can be both short term and long term. So the law uses the terminology gross capital gains, which means both short term and long term. Read through the conditions once. Yeah. It is shifting also allowed, expenses related. No, Raja, it is investment. No, you are shifting an industrial undertaking from it's a investment. And before going, I want you to understand 54 GA is also almost everything same, with a difference from an urban area to a special economic zone. 54 GA, all things are same. Please read that also. It is transferred to a special economic zone from an area. Urban to non-urban, 54G. Urban to special economic zone, 54GA. Non-urban area to urban area, they will tax more. Because there is nothing to promote there. Non-urban to SEZ also they will not promote, because in a non-urban area, the employment opportunities you are generating by having the industry there, etc. By coming to SEZ, you are enjoying exemptions. So those opportunities. So I don't want to encourage those things. Question number 39. X Limited owns an industrial undertaking in Kanpur, and it is in the process of shifting to a rural area. Assets are plant and machinery, building, furniture, land, year of acquisition, opening WDV, sale proceeds for the purpose of shifting, new investment for re-establishing. FMB of the land as on 1/4/2001, 1 lakh, ascertained capital gains. First, at the first level, work out for me land separately, like how we did for 54D, plant and machinery, building, furniture. You need not compute depreciation. Question itself is capital gain. This is additions made. Okay. Which block where you are getting capital gain? Go ahead. Land original cost தானப்பா. Okay, slash original cost போட்டிருக்கணும் நான். Yeah. லேண்டுக்கு அது WDB இல்ல, காஸ்ட் தான். Yeah, that is always there. Friends, first I'm working out for land. First I'm working out for land. The full value of consideration is 60 lakhs and less ICOA, 1 lakh into 317 by 100. Okay, gross LTCG, I get 56 lakh 83,000. 56 lakh 83,000 is the gross LTCG. Coming to depreciable assets. Okay, you need not work out the depreciation also. Even if you have stopped with this level also, I am fine with it. Question is not asking you to work out depreciation. Anna, for our friend purpose, when will capital gain come if the block ceases to exist? Block ceases to exist if the sale consideration exceeds or when all the assets are sold. Here there is an asset investment. I'm assuming it. Okay, but you need not even, if you are worked out up to this point, I'm okay with it. The point is, I have a LTCG of 56 lakh 83,000, STCG of 54 lakh 55,000. Am I clear to you, everyone? Any doubts, please ask me. So, where I reduce the sale consideration, okay, after opening balance plus WDV, this is the depreciation format. I'm getting 54.55 short term. I'm getting 54.55 short term. Shall I move on? Shall I move on, friends? Shall I? If you are still doing, I'll wait. Please let me know. Now, what are all the investment that will qualify for exemption? This 21 lakhs will qualify. You accept with me? This 12 lakhs will qualify. You accept with me? This 240 will not qualify. Enna Antonio, this is the point you should see furniture. It is not for computation. Furniture is a normal, but this furniture will not be qualifying. This 50 lakhs will qualify. This 50 lakhs will also. 21 will qualify, 12 will qualify, 50 will qualify. Am I clear to you? Okay. So it will be these three things are qualifying. Okay. Investment in land will qualify for exemption. Investment in plant will qualify for exemption. Investment in building will qualify for exemption, whereas furniture will not qualify. Now let us compute taxable capital gains. Computation of taxable capital gains. Okay. LTCG, STCG. Okay. On land, I get a LTCG. On land, I get a LTCG of 5683. On building, I'm getting an STCG of 54 lakh 55,000. Total eligible exemption is 83 lakhs. Total eligible exemption, my dear friends, okay, total eligible exemption is 83 lakhs. So how to distribute? First STCG, balance to LTCG. Okay, exemption under section 54G. On a prudent planning, please write that in examination. So tax planning inside. On a prudent planning, exemption should first be provided to STCG as it is taxable at a higher rate and the balance to LTCG. So I will first provide entire 5455 and the balance 3 lakhs minus 455 to, okay, taxable LTCG. Am I clear? Okay. You are reading and doing the next question, because next question is an examination question of 54G. It has come twice, I believe, with various data. I mean, numbers might change, but you yourself read the next question and do, please. I want you to try. This is the answer, 2380,700. You all got it. And for furniture, you got the short-term capital gain. When it comes to exemption, please understand, furniture is not at all a qualifying asset. Okay? The total qualifying amount might be 48 lakh 60,000 or more than that also. But only for 2380 you can provide for land. Other exemption you cannot provide for furniture because it is not a furniture. Even if you invest in furniture also, if you sell furniture also, exclude that. The section says what is a specified asset. Sudha, you're there in the class. Huh? You said Saturday you won't be there, but I'm happy you're there. I'm just asking.
No, sir. Actually, I asked for tomorrow, sir, but I've cancelled my trip due to conditions in Bangalore. So I'll be attending tomorrow's class also, sir.
Okay, okay. Oh, okay, okay. Oh, conditions in Bangalore because of this Rajkumar son. Okay.
Yes, sir.
Are you clear? Okay. So taxable STCG is 10,000 in this case. Okay. Remember this, and 54G is a popular questionable area. The same question which you have now worked has come twice. probably change in numbers, but it has come twice in the past 10 years, 10, 20 question papers, it has come twice. 54 is the most popular. Next to 54, it is not 54B or EC or F. It is 54G. Rarely only they question on 54 EC, etc. Okay, remember that. And the next exemption is not so popular exemption. Is not so popular exemption because I always felt right from the year of introduction that it is going much against our living style. Okay, we are in a country where my parents or your parents would have advised you do business, earn money, and buy house. But the exemption is reverse: sell house, do business. அது இந்தியால பாப்புலராகவே ஆக முடியாது அந்த exemption. Okay, we are very sentiment driven people. Okay, always we are all sentiment driven persons, people. Okay, நான் சிஏ படிக்கும்போது சங்கர் நாராயணன் இப்போ இஸ் வேர்ல்ட் பேங்க் ஓகே ஓகே same shirt he will wear for 8 days from inter. He will maintain that shirt only for exams. அப்போ பிகாம் கரஸ்பாண்டன்ஸ்ல படிச்சிருந்தான், அப்பயும் அதே ஷர்ட் தான், எக்ஸாம்னா இந்த ஷர்ட் தான். ஓகே, சிஏ ரிசல்ட் ஃபைனல் வந்த அன்னைக்கு நாங்க அவன்கிட்ட சொன்னது ஷர்ட் தப்பிச்சுது அப்படின்னா. ஓகே, so it is, we are all such a level of sentiments. We all have, we cannot deny, all of us have. Even I know staunch non-believers who are my friends, but they are sentiment driven. Okay, they are all sentiment driven. They are non-believers for the eyes of public at large. Okay, but they are all sentiment driven, even if they are non-believers, but sentiment driven. However close the vehicle is, okay, the on the car முன்னாடி அந்த பைக்குக்கு 1 inch தான் இருக்கும், still we will take forward only. Okay, when we start the car, okay, and the bike என்னானாலும் பரவாயில்லை, நான் காம்பன்சேஷன் கூட கொடுத்துறேன், ஆனா ரிவர்ஸ் எடுக்க மாட்டேன். That is that start of sentiment driven. We cannot. Okay, so in a country like that, selling a house property, okay, the 54 GB, why it is not popular is because LTCG on transfer of a residential property and invest in business. Okay, very maybe 1 out of 100 might or 1 out of 1,000 might, but in our country this cannot be a popular exemption. Okay, LTCG, this is, so it's a combo of domestic cum business. That's why I've kept it as the last. Okay, transfer on LTCG on transfer of residential property and investment in equity shares of small and medium enterprises. Okay, you should sell your house property, residential property, individuals and HUF. Asset transferred should be a long-term capital asset and it should be a residential property. Assessee should have invested in equity shares of eligible company. We'll come to eligible company later. And he should at least own 25% of voting right. Okay, this section, when introduced, it started with 76%. Okay, it should be your own company. Then they brought it to 51. In the last budget, they have made it as 25%. Okay, all set and done. I think with 31,322 it stops. Okay, Paniappan, who is writing in November, will be the last person to write this examination, provided the finance minister don't extend the date again. Okay, so 25% voting right in that company. The assessee should have invested. You should have sold your residential house property, which is a long-term capital asset, and you should have invested in the equity shares of an eligible company where you should own at least 25%, and the law does not stop here. That money, the company should in turn invest in assets, plant and machinery, etc. Okay, what you will do, You will sell your house property, have a capital gain, namesake, start a company, invest 25%, let the company buy car and give it to you, let the company buy air condition and give it to you. Okay, that is not my intention. Eligible company is one which is incorporated in the year in which capital gain arises and will hold a certificate from Interministerial Board, IMBC certificate, 80 IAC, we will speak about it, and carrying on innovation, development or improvement of product, process or service or business with a high potential for employment generation. Okay, that they will specify. Okay, investment should be made before due date. Investment should be utilized by the company in purchase of plant and machinery, and if there is any unutilized money, they should be kept deposited. In case of an eligible startup being a technology driven entity, the company can also utilize the investment in purchase of computer, of course plant and machinery. Quantum of exemption, LT, like 54F, into amount invested in new plant and machinery or deposited, divided by net consideration. New plant and machinery does not include any machinery which is second hand. Okay, any machinery in office premises or residential accommodation. Okay, office appliances including computer and computer software. However, there is an exemption which is available. Any type of vehicles or any machinery which is allowed as a scientific research asset, etc., you can claim. Okay, so 5 years you should not have transferred the shares, etc. Okay, no. 100% depreciation if you have claimed on asset. Now it is not there, or otherwise is 35 AD, 35. Read through the section once. Within 1 year, the third point is there. If the deposited amount is not utilized within 1 year from the date of subscription of equity shares, then I will withdraw the exemption. Yes. Still, you selling residential house and doing business is not a very popular. Yeah, yeah. And will not sell for doing business. Mr. Akash sold his residential property on 2nd Feb for 90 lakhs and paid brokerage of 1% on sale price. He had purchased the property in May 2003 for 2436. In June 22, he invests 75 lakhs in a private limited, an eligible startup which constituted 27% of share capital of the company. A private limited uses the sum as follows: purchase of new plant and machinery. Included in that is 8 lakhs for purchase of car and 1 lakh for purchase of air conditioner. Both you cannot claim. Amount kept deposited in a specified bank account. Compute compute the capital gains, assume that Akash is liable to file his return on 30th September. That was when the question appeared. Now it is 31st October, okay. And he files it before the due date. Read through. May 2003 he has purchased. Eligible investment 65 minus 8 minus 1 lakh. 65 lakhs minus 8 lakhs minus 1 lakh. Eligible investment is 56 lakhs. Eligible investment is 56 lakhs. Deposit is 10 lakhs. Okay. Okay. 66 lakhs, whereas your net consideration is 89 lakh 10,000. Entire net consideration is not invested, so exemption, okay, gross LTCG, that is 18 lakh 25,486 into amount invested, that is 66 lakhs, divided by net consideration, that is 89.10 lakhs. Okay, repeating, gross LTCG into amount invested divided by net consideration. the answer. The investment is the whole point. That is, it is not what you invest in the company. It is not what you invest in the company. It is what the company in turn invests in eligible plant and machinery. So it should not be an office appliances. It should not be a domestic asset. It cannot be vehicles. It cannot be 100% depreciable assets or where you can claim the asset itself. So 56 and 10. So on the basis of formula, and I get my taxable LTC. No, no, not like that. No, no, not like that. Don't. So, friends, if you look at the exemptions, the exemptions are first, I can call it as 54, 54B and 54F as exclusively more for non-business. 54EC falls at both the places. 54DGGA exclusively business and 54GB a combo where when you sell it's a domestic asset, when you invest it becomes a business asset. Okay, so these are all the various exemptions you can claim. The order of importance is first 54 is a very popular question. 54G in business is a popular question. Then only 54EC, 54F and all comes. Okay, and at the final level, they are more about 54. Okay, most popular sections only they are looking into. Am I clear to you? These are all the various exemptions you can claim. From the top once more, from the top now. To come under this chapter, there should be two conditions. It should be a capital asset. We understand what is not a capital asset. It should have been transferred. We know what is transfer, the elaborate explanation, and transactions not considered as transfer. One side. And then comes the next part, that is with regard to computations. Okay. Classification is important for two purposes. One, rate of tax, and mode of computation. A STCA will only have cost of acquisition, cost of improvement, whereas an LTCA will have indexed cost of acquisition, indexed cost of improvement. We know how the computation takes place. The denominator, the numerator changes, normally 317, but 4 cases: compulsory acquisition, insurance compensation, conversion of asset into stock in trade, specified agreements. In these cases, capital gain might be computed in this year, but the transfer has already taken place, so the numerator might change. The denominator, if it is one before 1/4/2001, obviously 100, that is the base year. Gift or inheritance with Manjula Jesha saying, no, that will not change. It should be again the cost of the indexation of the previous owner. And conversion of instruments. Then we saw for listed shares how to work out, especially purchased before 31/1/2018. And we also remember the small exemption of 1 lakh being given. Okay. So like that, we completed those things and then walked into depreciable assets. 50. 51 is advance money received and forfeited. You have to just look for the date before 31/3/2014. If it is by the same assessee, adjusted. Depreciable asset, immovable property transaction 50C, unlisted shares 50CA, exchange of assets 50D, and then the amendment of 50B. We saw it with some questions with a promise that after the material gets released, if they have made some changes, I will make that also. With that, the computation was stopped. I also have a promise or an unfinished agenda here. 9B, read with 45.4, read with 48.3. That is for firm, dissolution or reconstitution of firm. I said we will wait for it. And then walked into exemptions. 54, 54 B, 54 EC, 54 D in order I'm saying, 54 F, G, GA, GB. With that, exemption stops. There is a section called 54H, extension of time you can apply. Or masterkulle enala mudiyala, or the consideration, you can apply for extension of time. 55 is to do again with cost of acquisition, their goodwill and all is nil, and cost of improvement. Okay, 55 talks about cost of improvement. And 55A is valuation officer reference. A reference can be made to the valuation officer where there is a dispute as regards to the value. This is the chapter 45 to 55A. This is the chapter of capital gains, section 45 to 55A. Okay, right? We are going to do some more practical questions comprehensively and then go to theoretical understanding. The material in your hand might be little different for you people, but it will the same question. I am looking into question number 46. I'm looking into question number 46. Mr. Ram, a CEO of a company. Question number 46. Mr. Ram, a CEO of the company, furnishes the following particulars of assets. Residential house which was in Bangalore, which he had purchased for 1556. Listed shares of Indian company purchased in 2017, fair market value as on 31st okay 2018. Okay, unlisted shares purchased at a cost of 50,000 in May 2020. Units of equity oriented fund purchased in May 2019 at a cost of 30, fair market value as on 31st March 31st March 2018, sorry, 31st March 2018. This is also 31st March 2018. Okay, 1 lakh, because that's also equity shares or units of an equity oriented fund. Units of debt oriented funds. Debt oriented funds is like debentures, no indexation. No indexation, remember? Okay, 75,000. Mr. Ram made the following investments out of the capital gain. Purchase a residential flat in Pune, 54. Another flat in Madurai, 54. NHAC REC, 54 EC. Okay. Compute the total income and tax liability. His salary income is 24 lakhs. Interest from fixed deposit is 1 lakh. 1,50,000 to PPF and medical insurance 52,000 for a senior citizen. I know some questions are new to you. Don't worry. Read the question once. Now, debt oriented. No indexation. Debt oriented. This alone change it to 2018. Okay. Please understand. Residential house, listed shares and equity oriented fund. I should have given its own question, so sometimes I miss. Assume that STT is paid. Okay. I want you to work out according to 112. That's why these two. Okay. Unlisted shares, debt oriented funds. Obviously, all the exemptions can only be for house property. 54 and 54 EC asset transferred should be. Okay. So all the exemptions which they are specified is only for house property. Okay. Let's start slowly working. Together, let's work, please. I hope you noted that unlisted shares is a short-term gain. May 20 within 24 months. May 20, whereas transferred in, so unlisted shares is a short-term capital gain. Okay. First I am working exclusively for house. Okay. Go. நான் தான் அமெண்ட் பண்ணாம விட்டுட்டேன். 5 years bond தான். இப்போ எல்லாமே 5 years bond தான். 2 வருஷத்துக்கு முன்னாடி வரைக்கும் 3 year bond.
Sir,
Listening, Sudha?
can you just repeat what you told for listed shares and equity oriented funds, sir? The video got stuck. You told some change in years, sir.
No. I was telling them to change this to 2018.
Okay, sir.
Yeah.
Thank you, sir.
First, I am working only for house property. Six seven. What is it? The gross gain is less than 2 crores. So I can claim for both the houses. It is 35 plus 25. Okay. 35 lakhs plus 25 lakhs. No, they have given the date itself. 3 and 5. It is sold in January 22. So no assumption. It is invested. No assumption. Sorry. Okay. Restricted to balance capital, balance LTCG. Okay, though you can claim up to 50 lakhs, but LTCG itself is only 44 lakh 56,951 balance LTCG. Is this clear to all of us? Is this clear to all of us? Then I'm going for listed shares and equity oriented funds. Listed shares and equity oriented funds. We all know one actual FVC or FMV as on 31/1/18, whichever is less. Step 2, answer of step 1 or actual cost, whichever is higher. Okay, right? For listed shares. For listed shares, I am seeing that 2 lakhs or 1 lakh, whichever is, sorry, 2 lakh or 90,000, 2 lakh or 90,000, whichever is less. So 90,000, 90,000 or 1 lakh, whichever is higher. So 1 lakh. So 1 lakh for listed shares, 1 lakh. For listed shares, 1 lakh. Again repeating, 2 lakh or 90,000, whichever is less. Full value of consideration or fair market value as on 31/1/18, whichever is less, 90. That answer with actual cost, whichever is higher. Similarly here, 195 or 1 lakh, whichever is less, 1 lakh. 1 lakh or 30,000, whichever is higher, 1 lakh. Oh, sorry, friends. I stand corrected. It is purchased in May 19. It is purchased in May 19. It is only 30,000. I'm sorry. Okay. Okay. This is only, I'll add one more line. I stand corrected. I didn't read that. Okay. For equity oriented funds purchased after 31/1/18, okay, only actual purchase price should be considered. Yes, our friend is right. It is only 30,000. It is only 30,000. I will give the 1 lakh exemption when I am doing the tax working. I'll give you total income working. I will give that. Unlisted shares, debt oriented funds. Full value of consideration for unlisted shares 95,000, for debt oriented funds 75,000, less COA as it is a STCA for this 50,000, COA as indexation is not available. For this it is 31,600. I'll consolidate and keep it here. Gross LPCG taxable under section 112 is 43,400. Gross LPCG taxable under 112A 1 lakh plus 1,65,000 less exempt 1 lakh. So taxable portion will be 1,65,000. Gross STCG 45,000. a lengthy question. Let's have the patience. Computation of total income. Computation of total income. Computed means they have given standard deduction, everything we have to take as it is. Capital gains. General is 43,400. 112A is 1,65,000. STCG is 45,000. No, computed means they have given everything and given the taxable quantum. Other sources. Interest 1 lakh. Interest from FD 1 lakh. If it has been stayed savings bank, I would have given 10,000 rupees. It's not a senior citizen, so FD I will not give anything. We will read all these things, don't worry, later. But as of now, with your inter-knowledge, maximum you can claim is only 1,50,000. Medical insurance premium, insured being senior citizen, you can go up to 50,000. You can go up to 50,000. Otherwise, it is only 25,000. We will have it read. But in this case, insured being a senior citizen, up to 50,000. Oh, okay. Sorry. Computation of tax. LTCG under 112A at 10%. So this 1,65,000 at 10%. Other LTCG at 20%. The debt-oriented funds which you have is at 20%. Income taxable at normal rates, the balance 25 lakh 53,400 minus 1 lakh 65 minus 43,400. This we all know. This minus 10 lakhs into 30% plus 1 lakh 12,500. Is taxable at normal rates. STCG on which STT paid is only 15%. No surcharge and all. He is not a senior citizen. He has taken an insurance for a senior citizen. Am I clear? Okay. We'll meet tomorrow morning, 6 a.m. to continue. All the best. All the best.
Thank you.
Thank you.